Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and be with you for my guiding, taking a look at the markets for this week and the upcoming week, and kind of guiding you through my analysis. And anyway, we're going to jump right into it. Just a reminder that we are not broker dealers or investment advisors. Taking a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, or telling you to. Past performance is no indication of future results, and we're not subject to trading restrictions, so we can have a position of security initiate one at any time. Also, would love to hear back from you. If you got some feedback for us, you can hit me up at brandonwendell.cmt@gmail.com. You can also find me on Twitter at TraderBDub. And of course, you can give comments on the videos here at the Wendell Effect on YouTube. So for today's schedule, pretty typical. We're going to go into weekly market analysis with the equity index futures, energy futures, and then sector analysis. I want to give you another reminder that next week on the 20th, which will be a Tuesday, we're going to do a special live session at 3 p.m. Eastern. So we're actually going to be doing live market analysis, and you'll be able to interact with me and get some questions answered if you have them about what I do for analysis, or even certain securities that we're looking at as well. Be sure to attend that and be with me. So again, 3 p.m. on Tuesday the 20th, we'll do a live session. So jumping into this week for the equity market analysis for the week of December 11th, starting off with the ES, we started to see that return to the bearish move where we peaked out kind of on the equity indexes and are seeing more bearish pressure returning to the markets. During the rally, the RSI never got into bullish territory, at least not on the ES. So it's basically telling us that we're going to continue to stay a bit bearish here. Going down to the daily chart, we came into not really a supply, but definitely the origin of lots of selling pressure. And as you can see, we had a negative divergence that led to a push down. Now, to get a confirmation for a trend reversal, basically what we had was the warning sign of trend weakening. That was a divergence. But to get an actual trend reversal signal, we need confirmation after that divergence. What we need to see is, here we have a high in price. We need to have lower high and lower low on either side. So basically, if on Monday, Sunday going into Monday, we end up making lower high and lower low on the candle, because the RSI was so weak, that would confirm the trend is reversing and moving back down yet again. And I would look for us actually to break the 3750, possibly down towards the 3600 by the end of the week. We could have a pretty good sell-off this week. We got a lot of news coming out, I believe. Let me just take a look real quick as well. So here we are looking at Forex Factory for the news, and we can take a look. Actually, I can go ahead and filter this out for just the US if I want to, but let's take a look for the entire week here. There we go. And filter, again, just US dollar, just to make it a little bit easier for us to see for the entire week. But we do have some major news coming out. On Tuesday, we have CPI numbers, which everybody's closely watching. This is a case where good news is bad and bad news is good. So if the CPI numbers are higher, that means there's more inflation. That's bad, but that's good for the stock market in a way, because it means that the Fed will probably have to continue to raise rates. However, if they are, the other way around, I'm sorry, if the Fed is raising rates, then they're likely to see a little bit of a sell-off in the market. So then if the CPI comes out lower than, or better than expected, higher in a way, you would think that the economy is growing, but because the prices are going up, again, the inflation is higher, the Fed would raise rates. If the CPI comes in lower, the Fed might be able to be a little more dovish and not raise rates as much, and therefore you could see the stock market continue to grow. On Tuesday, that's Tuesday. Wednesday, we got the FOMC statement. So obviously, we might have a lot of sideways movement after a reaction on Tuesday going into Wednesday. So everything's going to be a little choppy and sideways until Wednesday and the Fed announcement. And then more importantly, the Fed conference, where they actually tell you what's going to happen going forward, what they're looking at, and what kind of triggers they may have towards raising or lowering interest rates. So keep an eye out for that. We do have Philly Fed manufacturing number coming out as well on Thursday, and also the manufacturing index. So that's the Empire State, New York. Now that'll also have a pretty good impact as well as, of course, retail sales. So keep an eye out. Lots of news this week to kind of shake up the markets. But really, we might be a bit choppy and sideways with initial reaction on Tuesday's news, and then everything will start moving again on Wednesday once the announcements are out. So be careful for that. Anyway, going down to the 4-hour chart, I'm expecting more bearishness even when the news finally does come out. You can see we've got a supply that we kind of failed to hit here at 40.31, and we're already dropping from that area. There's very little momentum whatsoever, so it looks as though we're going to continue to impulse downwards possibly to retest that 3,800, that demand zone at 37.97. The markets that have been leading, it's been the Dow to the upside. I keep going back to this comparison. You see, in October 14th, we've had the Dow leading us up while the Russell and NASDAQ are the leaders down. Usually, when you get divergence like this, we get a bit of a trend change. So, as of right now, we started getting some new lows being put in by the Dow. That was allowing the weak markets to drop, but they dropped a little fast. And the divergence may mean that we're going to turn and go a bit sideways or even a little up later in the week. So I'm not expecting that until about Thursday or Friday. Again, after the Fed announcement, we'll probably be a bit bearish or choppy sideways until then, and then maybe a little bit of bullishness afterwards. Looking at the NASDAQ, this has been the weaker index. As you can see, we retraced very weakly, and we couldn't even get into bullish territory there. So this is getting ready to turn back down again. I forgot to delete those lines. Our actual demand on the weekly is 7,500 down there. Not that we're going to get there, but we are going to see a little more weakness as we've tested deep into supply, but we still couldn't get very bullish. We're not bearish either, but we're just kind of sideways. There's not really much of an indication on the NASDAQ whatsoever. It wants to drop, but with the bullishness of the Dow holding it up, it can't free fall as of yet. On the 4-hour chart, pretty much the same thing. We're stuck in sideways range here between 11,500 and 11,900. So we're likely to see that until we get the Fed announcement on Wednesday to really give us more direction. The Dow has been the leader to the upside. So let's take a look at the Dow. It's wrong way. There we go. And you can see the Dow finally came into a weekly supply zone. We had this kind of rally base, and there's that drop that began right there. And we went into the zone, but couldn't move into bullish territory. So that was kind of the green light for last week's catalyst of dropping. You see, we broke that low right there, and we have more selling pressure. This is suggesting the markets are likely to continue down. When the strong market gives up and finds weakness, we do have this as a possible demand zone coming up that we'll watch. But if we continue to see weakness coming in, and especially if the RSI can get below 40, then we can break down towards that 30,000 level this week. On the daily chart, we had a negative divergence. We've tried to make another high, and we are nowhere near 60. So that's a suggestion that the trend is reversing. And instead of continuing impulses up, because we did hit our first target here on this impulse, it's suggesting that we might actually start pushing down towards 30,900 right here, where we have our next demand zone. So keep an eye out. Obviously, Monday and Tuesday will be a little choppy. Wednesday will really be kind of the kickoff, if you will, for the trend to let you know which way it's going to go. On the 4-hour chart, we're seeing more bearish pressure. We've had a retracement from the highs. We've retraced about 38.2% so far, but it doesn't look like we're done. We're still in bearish territory here below 40. We held supply. Therefore, it looks as though we're going to keep pulling back. We might be stalling out at some of these Fibonacci retracement zones, but ultimately we are going to be looking at testing a prior zone that's already been tested pretty deep. I don't think that'll hold. So it looks as though the Dow, which was the leader to the upside, trying to take us higher, is really giving up. And if that's the case, then the Russell and the NASDAQ, which we already looked at, will be the ones that keep us going lower. So watch to see, as long as we don't hit a strong demand. And going back to the NASDAQ, there's nothing on the weekly chart until 9,000. On the daily chart, right around 10,000, we've got something here that might hold us a little bit. And on the 4-hour, again, we got to break through this 11,500 area before we can seriously move to the downside. So watch to see if we start pushing down. If this holds, then obviously the markets will continue to go a bit sideways, possibly even up. But if this breaks down and the Dow's already given up its leadership, we're going to see more selling pressure coming towards the end of the week. So looking finally at the Russell, that looks very weak on the weekly chart. We've hit both supply, we've hit demand. Can't seem to get up to that supply zone again, so that's suggesting some underlying weakness that's likely to take us through this demand zone going forward. Now, that obviously will not happen this week, but we could see some serious selling pressure here. This is probably the leader to the downside now. We've tested supply twice. We were weaker on the second touch, didn't go as high, and are already trying to find some new lows here pretty soon. So it looks as though we might get a small pause here at the 17,050 or 1,750, but ultimately this daily chart should take us lower. And on the 4-hour, we just missed this supply and already had more selling pressure picking up. You could mark this as supply as well. We kind of have rally base drop, but it didn't really have a good leg out, although there is a lot of selling pressure there after we had, we wiped out some of the buying pressure with the wick and then removed it with the selling there. So if we do push back up to about 1840, there could be a shorting opportunity there, targeting first 1784, then 1718 for target 2. Moving on to the energy markets, we're starting off in crude oil. You can see that we have had an impulse correction impulse. We hit our target number 1, and we're pretty bearish. There's no reason why we can't make it all the way back down to target number 2 at about 58.86. So we'll see if we continue to push down that way. It's not going to reach that this week, but we could get more selling pressure. Usually after a big candle like this, you'll get a little pullback first anyway. Looking at the daily chart, we are in a bearish trend. This is what I was talking about, where you get a confirmation after a reversal signal. So here's your reversal warning with the negative divergence. And then there's that high that was put in that we couldn't get into bullish territory. So the trend has obviously shifted and demand zones aren't holding very well. So we might open up on Sunday with a little bit of a pause here, but ultimately we're going to continue to see more selling pressure in crude oil. Looking at the 4-hour chart, that's all we see is bearish pressure, potentially continuing down to 68.89, 65 is the next target after that. And there's enough selling pressure to keep us going that way. So look for more shorting opportunities this week. On nat gas, we are impulsing down. We just hit our first target, had a pretty good bounce from that area. As you can see, the first part of the week went down, the second part came back up. On the daily chart, you see there's our correction that we're currently in. We've retraced only about 38% of the initial thrust to the downside. So we're likely to see continuation. If this is all we retrace right now, we could continue to move down towards that 3.6 as our next target this week. It may not hit it this week, but we'll try to move down that way. 4-hour chart doesn't really show anything different other than we might have a couple of bigger targets here, or closer targets. Instead of 3.6, we're not likely to reach that in this week. What we could do, though, is if we start dropping from this area, if you break below 6.007, you could potentially short with your stop at 6.422. So you sell the breakdown of this fib level with your stop above the previous fib level, and your target 1 is 4.636 with the target 2, 3.551. Looking at gasoline, we have already hit target 1 and our impulse down. We are chugging away, trying to head towards target 2, 1.70. Might get cheaper at the pumps for us this week. You can see on the daily chart, pretty much the same thing. We have the impulse correction impulsing now. We have a nice supply zone at 2.3 to 2.42 if we can even rally. This is showing lots of bearish pressure. It doesn't look like it wants to turn around at all. So we could continue to go lower. Looking at the 4-hour chart, we got a good supply zone, a possible short entry at 2.27 to 2.34. There's a lot of other areas right here you want to keep in mind as well as we move down. So just be careful. There's a lot of little stair steps on the way down. Some of them could act as a little bit of demand. We'll just have to keep an eye out on that. Moving along here, we got heating oil looking like it wants to move down to the next target of 2.6 to 2.51. We do have a little bit of a pause going on right now. We had this big candle that broke down from prior lows. Normally those will retrace a little bit before they continue to move to the downside, so keep an eye out for that. On the daily chart, again, this broken demand often can act as a little bit of support, resistance, sorry. It says support, it should say resistance. I made a typo there. So what happens is this broken demand zone, as prices come back up and try to retest, it may use it as kind of a resistance level and push prices continuing to the downside. So I wouldn't be surprised to see it stall out there rather than moving up to 3.24. So I'm using this 2.93 to 3.06 as a possible shorting opportunity. And then we've got a couple possible targets here. If we do use that area, we even have supply overhead if we don't. But on the 4-hour time frame, our first target 2.6054 to 2.4245. So we'll keep an eye out for that. Anyway, we'll move over to the stock market now and get an idea of where we might be heading for the stock market and some of the sectors this week. So kicking this off, looking at the last 238 days, basically year to date is what we're looking at here. And we've got this against the S&P 500. You can see that we are still having leadership from the safe havens, the staples, healthcare, and utilities. That's suggesting the Santa Claus rally is not going to happen because people are moving into safety, expecting more bearishness to come. towards the end of the year and going into the new year as well. Energy, obviously, inflation is still a problem, so there's a lot of gains in energy, but it is falling off from those highs. You take out the S&P 500 again, same thing. This is the same chart, just taking out the S&P 500. So this is how the sectors are actually performing, and you can see that almost nothing is positive except for energy. We barely have some positivity in staples and utilities. That's it. And that was because of the low interest rates and the flight to safety, if you will. Okay. So going into last week, let's take a look, see what's going on there. And again, flight to safety. So you can see with against the S&P 500, we've been having outperformance of the safety securities, which is utilities, healthcare, and staples. So again, this is pointing towards the market heading continually to the downside. And if you take out the S&P, the whole market was pretty much crashing, but the least sucky, if you will, were the staples, healthcare, and utilities. Again, showing that we are in that mode of the market where everybody's expecting continuation of the downside and more of a recession to be hitting. Anyway, year-to-date performance on the markets, again, reflects the same thing on the map. You see healthcare has also been a safe haven, a little bit of industrials, but really aerospace and defense and energy altogether has been very, very bullish. Last week's performance, obviously lots of bearishness. However, healthcare was still holding up a little bit as a safe haven. So with sector ETFs, looking at the individual sectors, again, we saw a lot of weakness in XLY, which is the consumer discretionary, really just choppy and sideways still. We haven't broken out that sideways motion. 137.45 to 147.57 is roughly our sideways area. And we might be bouncing off the lows and getting a little bit of bullishness this week, but we're not going to likely get above that 147. We really just don't have momentum to go either way. This has been a dead sector, and unless you're day trading, it's probably not good for swing trades on this market. The communication sector, we looked at this last week as a possible shorting opportunity, and you can see we did leave that area and made it almost halfway to our first target for the second time. We did this the first time, another test, and unfortunately we didn't get into bearish territory. We couldn't get below 40, which means we're probably going to stall out here and may end up going back up into the supply. So if you got a profit from testing on the second test, you probably want to take those profits. This doesn't look like it's going to be able to continue to move down. It's likely to retrace back up towards that 5150 area before we see any more movement in trends. The technology sector, XLK, is also stuck in a range. We ended up impulsing up to basically duplicate the previous impulse, and now we're just stuck in the range between 135 and 128. So it looks like we're going to continue as we have no momentum in either direction. So you're better off looking for swing trades in other sectors. Day trading and scalping is what you can do when you got that sideways market. The materials sector, XLB, did show a divergence and retraced only 23.6%, but we're still pretty bearish. It looks like we may be able to continue down towards the 79.12 and even 77.63. So we're going to still see more bearishness in the material sector. Expect that to sell off a little bit more. Looking at, let's see, that was the daily chart. And looking at the weekly chart, actually, I brought that up. And the reason why we're sliding down, as you can see, we came close to weekly supply, kind of rally-based drop, but we couldn't make it in there because we didn't have enough bullish momentum to get into that zone. We stayed below 60, which is very bearish, and we're actually already starting to go down, which means we're going to continue to drop here on the daily. So look for shorting opportunities. I don't have a great entry on the materials ETF, but the materials sector, finding individual securities there that are weak, that'll be a winner for shorts. Anyway, moving on to our next sector, the energy sector. It looks like we pulled back quite a bit, almost into demand. The problem is we have too much bearish momentum to bounce very well from here. So if we do get any kind of bounce, it's likely to be a dead cat bounce where it only goes up a little bit before prices continue to collapse. This is a very bearish sector. We went way too high on that move up. And because inflation, especially if CPI numbers come out at the beginning of the week a little bit less than expected, energy should continue to slide as well and should slice through that demand without much problem. Now, if the CPI numbers come out and they're inflationary, much more than expected, this could end up holding, but I don't expect a big bounce here. I expect more sideways movement. The XLP consumer staples, we did have a little bit of a rally going on because of the flight to safety, but we lost our momentum. And you can see it had gone deep into supply, but we pulled back. We could get some more renewed buying to push us out of that supply, or more likely, we're going to drift a little lower towards 74 this week. The utilities, which also is a very bullish sector, has gotten a lot weaker here with momentum. You see it's dying off a little bit, and we may end up going well, kind of bouncing in between our zones, 68 to 85, 73, kind of got a little bit of a zone there that we might end up going back and forth in between. So not really seeing a whole lot out of this. We had a pretty good move off the weekly demand. It's a bullish trend and are just kind of stalling out at this area. The financials also look pretty bearish. We had a negative divergence, pulled back to 38.2%, but we're getting lots of selling pressure, which suggests that we're going to continue to move to the downside, maybe to 33.81 or even lower to 33.17. Kind of keep an eye out here. If we can hold above 40 on the RSI, we'll start to bounce. If we don't, if we break that, then we're going to continue to slide. On real estate, we got a negative divergence, which gave us the beginning of this pullback, and it looks as though we're not getting any more strength here, so we might get another push down. Lots of topping tails on the daily charts suggesting prices are going to move back down towards 38.2 or 23.6 retracement as we continue the downward move. One of the plays we were looking at here is Welltower, and unfortunately, it made it to target 1, but as you can see, we couldn't really hold in bullish territory, and we ended up breaking down below the stop loss. So hopefully you were able to get out with a profit at target 1, or you got your stop loss set up and you got out as you're starting to pull back a little bit. But this trade is no longer good. You want to make sure you're out of that long. We did have some other trade ideas that were announced last week. Microsoft was one, and unfortunately it stalled out on its way to target 2, came back and it's retesting target 1. We had lots of bullish activity there, and we're not really making new lows. If we do break down below 50 on the RSI, you'll have to give up on this. But otherwise, you may just go a little sideways and then slowly try to climb up towards that target 2. So make sure your stops are in place, but there's no need to panic yet, unless, of course, we go below 50 on the RSI, and then we're starting to pick up too much bearish momentum. Looking at Disney, this was a great short entry a couple weeks ago we looked at. And you can see it's on its way down to the target. We're starting to slow a little bit, but basically I've got the 8 and 21 exponential moving averages on the daily chart now as a trailing stop. So if we either close above the 8 or we break the 21, then I'd want to exit. Otherwise, continue to hold on until you hit 87.24 or 78.80 as the targets. APP for another opportunity here. That's weird. It's not showing the whole trade. There's an area of supply right here. Let me go out and fix this. Show you the chart the way it should be. Okay, so here we are I'll go to a daily chart. And on this daily chart, I'm not sure what happened, but what I'm looking at is we got a nice supply zone right there at the top. Let me go ahead and fix this. There we go. And my entry zone is this rally base drop from 1381 to 1450 with the stop loss, as you can see, at about 1460. As far as targets go, I don't think we have anything right down below here. If you look back, we haven't been this low, well, pretty much since the beginning of that security. So instead, what we could do is go to a bigger time frame, the weekly, and use a Fibonacci extension. Now, as far as our previous impulse, we have right here, impulse down, and we started a little correction here. So maybe I use that. And again, go back to the daily time frame, and there we actually can see, yeah, we had our impulse down, a little bit of a correction already. We're getting another little correction, but I'm using the other ones as my entry and target. There we go. So now we got 784 and 194 as our possible targets for that trade. Okay, and I realized what I did here, I actually had it on a 4-hour time frame. So going forward to my slide there, you can see I was trying to tighten it up a little bit, but it's pretty much the same trade. We had rally base drop right there, and we got 1397, 1448, target 1, 1188, target 2, 1027. So that's a little bit different on the 4-hour time frame, but that's what I've got as a possible trade opportunity. So Borg Warner, another trade opportunity we were waiting for, has not moved back into the demand zone. We're still waiting for that entry at 38.85, so that's still pending. And then CPRI, also Capri Holdings, waiting for a pullback made a nice little double top here, so we might be breaking the neckline of the double top. That means you could do a small counter trend short if you wanted to, targeting the 53.63 entry for the long. So again, double top formation. We could possibly short here with the stop loss, maybe one ATR above on the 4-hour time frame, target 53.63, but then turn around and go long with your stop at 52.80 and make these targets Fibonacci extensions to the upside. And finally, we have Yum Brands. So we only have one target here. We have this demand zone we're coming into at 127.07 to 125.51. Looking to go long at the stop at 125.39, targeting 134.52. So that's what I got for you this week. If you have any questions, again, email me. And don't forget the live event next week, Tuesday the 20th at 3 p.m. Eastern. I'll be live going over the markets and doing our analysis. So until then, trade safe, trade well, everyone, and take care.